This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. Daniel O'Brien, K-State grain economist, and Guy Allen, the senior economist at the IGP Institute, begin today's show as they chat about futures, cash, and what they saw in the WASDE report for corn and grain sorghum. In the second segment, Daniel and Guy continue their discussion with wheat, soybeans, and what other factors are impacting the market internationally and domestically. K-State meteorologist Chip Redmond wraps up the show as he highlights the roller coaster of Kansas temperatures and precipitation and if it will continue. That and more is coming up ahead. You're tuned in to Agriculture Today, and we start our Friday show with a grain market update from K-State grain economist Daniel O'Brien and the senior economist at the IGP Institute, Guy Allen. Daniel, Guy, I appreciate both taking the time to join us today.
Thank you very much.
While we're looking at the markets today, wanting to start off with futures, and Daniel, what are we seeing?
We're seeing a more volatile futures and was probably justified by the WASDE report. We had a WASDE report earlier this week on Tuesday the 10th. Didn't show a lot of changes, but yet other factors, which we'll talk about later in the energy markets and exports or export prospects, pretty much have ruled the day. So when you look at, we'll start with corn. We're almost to the end of the March contract, so we're kind of focusing on May as the lead for the activity that grain elevators, grain industry people would work with. So we closed yesterday on Thursday the 12th at 462.5. I guess if you look back about 6 weeks, we had been trading as low as about 426 and a half, or 456 to 426 range. Here so far in this week, if you just go Monday through Thursday, we've had a low of 445 and a half and a high of 476 and a half on the March contract. I'd add in that probably what has our attention on the ag sector would be what pricing opportunities for new crop we'd also be looking at. And D's corn closed yesterday at $4.90. So that's about a 40-cent increase from the about hanging around the 450 area that we'd seen for a good long while. There's this and futures are setting some historic highs. Guy, I think you have pretty good information on that if you like to talk them.
Yeah, look, on the corn side of things, futures closed there at a 2-year high, or nearly a 2-year high, highest we've seen since May 2024. So as you say, we're seeing good support, and that's flowing through the whole complex into sorghum and the whole feed grain situation. You started to talk about soybeans there. We got multi-year highs across the whole soybean and oilseed complex in settlement prices at highs for soybean oil as well as for meal in there. New crop values are the highest we've seen since May 2024 as well. So a bit of this conflict is actually lending a supply support to physical commodities as well as to gold and the precious metals and oil there as well.
And as we're talking soybeans, it closed for the May contract 12.27 and a quarter yesterday. That out into November. For that contract, we were at 11.65. When we start talking cash prices, look a little bit at the new crop forward contract bid ratios in Kansas locations to give us some idea for our state what the price ratios might be and what they might be leading us towards. Just would add in as we keep going. For hard red winter wheat, we've seen hard red winter wheat contracts. The May contract closed at 613 and a half, and here it wasn't, and that compares to the low that we'd seen back in October of last year, a low of about 513 and a quarter. So literally $1 higher on a close. The highest trade yet for this last week, Monday through Thursday, actually was up to about 647 and a half. So again, tangibly higher, better opportunities for pricing than we'd seen in the past. But again, we'll talk about cash prices in a minute. Any comments on the wheat futures, guys? You look at that?
No, look, it's firmer. Yeah, like you say, highs from a year ago, not quite as spectacular as the corn and oilseed situation, but good to see some good support there.
Let's talk cash prices also. As you look around the state for closing cash markets yesterday, again, Thursday the 12th, you see strength where you expect to see it in Garden City, a high price on the cash side at 433 in cash market. The actual highest price in the state, though, is in Southeast Kansas and Pittsburgh area at $4.53. Not all elevators were there, but one or two of the leading elevators were. New crop bids starting to show up for corn, $4.80 in that Garden City area. 455 at Colby, 445 Salina, 465 Southeast Kansas. So again, just a markedly different situation than we'd seen for old crop corn holders. This is I don't know, Guy, if you call these things something like this a gift, but it's surely not expected by the market. If you look at our seasonal trends, we tend to actually get pretty docile and sideways coming in the March timeframe. But here we've got this outside factor, unplanned, really unanticipated by most, that's brought prices higher. Comment on that, Guy?
Yeah, look, the last couple of years, storing grain, particularly when you get past March, has not been real rewarding. This year may be a bit of a different case, more luck than sense on that. But it just goes back again to some risk management to keep your options literally open going forward for these sort of opportunities and just manage them appropriately as you can take some profit off the table.
And I'd add in on sorghum. We've been watching sorghum markets have come through pretty well as we've seen China come back into the market. We have a cash price in the Hutchinson area of $4.08, over $4 a bushel. And in recent history, that's pretty good for sorghum. But the new crop bids across the state, the top bids for everywhere except in Southeast Kansas, are all at $4 or higher. So here we are, planting season. We have pretty good signals. I just would mention quickly for soybean bids, top cash bids like 1163, 1167, Salina, Topeka, Hutchinson, 1157 in Pittsburgh, more like 11.7, 11.17 out in the west. New crop bids, all pretty uniform, really around 10 everywhere, but in the western third of the state, around $11, a little bit higher. So thought-provoking. And for wheat, wheat harvest not that far away. Yes, some top new crop bids in the state, over $6 now in the Salina and Topeka area, 603, 577 out in Hutchinson, Pittsburgh, 551, etc. I would say that the new crop bid ratios are all, I guess, where you'd expect in the eastern two-thirds of the state to see more competition between corn and soybeans. In those cases, soybeans generally has the forward contract price advantage right now.
Wanting to chat more about these commodities, pulling away from just cash and futures, and starting off with corn. Daniel, Guy, what have we been seeing?
In that last WASDE report, almost no, for the corn supply demand balance sheet, no change domestically at all, except that the USDA did whereas for grain sorghum there was a small change, about 5 cents lower than otherwise. I think this report probably had no activity in these balance sheets for feed grains because we're waiting for both the prospective plantings, but also the grain stocks report that'll come out here at the end of the month. So once they get that grain stocks report in hand, then they can come back in and have a better idea if there's any change in feed usage and possibly some signals back on what supplies, imports, things like that might be. So really no change of note on either corn or grain sorghum. I would say though that when I look at the reports that we've gotten from the USDA in terms of exports, you see corn exports this last week have been pretty strong again. We are at about 66 million bushels, and that's just a continued strong pace of exports for the week ending March the 5th. Needs 69 with USDA's projection. For grain sorghum, needs about 5.5 million bushels a week, and had a second week of really strong grain sorghum exports at about eight or so million bushels for that week. On the international side, Guy, any comments for corn or sorghum?
Yeah, before I go to the international stuff, just wondered if you had any thoughts on that stocks report. I wouldn't be surprised if we saw a bit more domestic consumption than maybe what we anticipated when that comes out. That's sort of my bias.
Well, if it shows the first place they'll see it probably would be in the feed side, because they've got pretty good data for ethanol usage for exports and wet corn milling, and there could be some surprises there, but probably. I think what we looked at these quarterly reports during this time of year for is some confirmation of livestock feed usage, just because we don't have any other good measure of it, or some preliminary reports if the size of the crops are as had been projected by the USDA. Typically, the USDA doesn't make adjustments in crop size until we get down the road to the September or December reports.
Yeah, no, I'd concur. Looking at the international side situation, we do need that good demand there. Just keep in mind, we've got record coarse grains production, record corn production, 1,297,000,000 metric tons. That's a lot of grain to be chewing through. And it's good to see both strong feed sector as well as ethanol sector demand helping to drive that. Perhaps seen USDA increase their Southeast Asia corn imports slightly to 22.2 million metric tons. China was left unchanged on their corn imports, still holding steady there at 8 million metric tons. Wouldn't necessarily expect to see that change there a whole lot on that. So really not a lot of excitement internationally on that corn situation, but our export base does continue to be quite strong.
We're cutting to a short break now on Agriculture Today, but when we come back, we'll once again be joined by Daniel O'Brien and Guy Allen as we continue our grain market conversation. You're tuned back into Agriculture Today, and we continue our show and conversation with K-State grain economist Daniel O'Brien and the senior economist at the IGP Institute, Guy Allen. In the last segment, we talked about futures and cash, and then took another look at corn and grain sorghum. And so picking up this segment, discussing wheat, and Daniel, what are we seeing?
In the last WASDE report, just minimal changes in that whole supply-demand balance sheet. One thing that did happen was that we went from $4.90 as a projected price to a nickel higher to $4.95. Clearly, that breaking of dormancy for winter wheat and other reports that'll be coming out, the quarterly stocks and weather reports now, because we're moving strongly off into April, May. So all that will be at issue. And really, the biggest thing that I see as I look at wheat supply demand balance sheet is that, again, 2 years ago in the 23-24 marketing year, we were at 38.4% stocks to use. Last year got up to 43.4% stocks to use projected. Coming into the ending of this year, which will be May 31st, we're up to 46% stocks to use. So building stocks. We have had, from a domestic usage point of view, just under 16 million bushels of exports overall for all wheat classes in the United States through the week ending March the 5th, and need a pace of about 19 to meet the USDA's projection. So we're running behind pace. However, for hard red winter wheat and hard red spring wheat, we had pretty good weeks last week. Had about 6.1 million bushels actually shipped of hard red versus about 6 to meet the USDA's projection. Hard red spring, about 6.5 million bushels, need just under 5. So hard red spring wheat's been really bouncing around, good week, bad week, whatever. So not a lot of change there. As I was looking at the international supply demand numbers, again, not as you and I talked before we came on the air, not a lot of news right now, other than maybe in your home area in Australia, they've got some weather issues, pro and con going on. But when you look at the international stocks to use figures, all hanging around for a world less China, actually jumped to 22.5% stocks to use, higher than the previous 3 or 4 years. So all that taken together, not a lot of change that's expected or anticipated in these markets, other than what volatility might be brought up by the international factors.
The only comment I would make is with the strong rally we've seen in corn, I would probably expect more wheat feeding in coming months, not only in the U.S. balance sheet, but more so internationally. And so some of the key production areas like Australia, they've faded a bit lower, but exports out of Russia and the Ukraine were faded slightly lower. Not material, but it is leaning a bit supportive. But I'd be watching that feed usage for wheat space a bit.
Speaking of feed usage, we didn't mention it when we talked about corn, but there are rumblings from the political leadership of Mexico that they would like to have their folks move more towards buying domestic supplies. And the response back from farmers was that there are sound reasons for buying lower priced corn from wherever you can get it. And that was the issue there. Soybean supply demand balance sheet had slight changes in it, just some adjustments of about 5 million bushels more of imports into the country, crush up about 5 million. So really no change, still sitting at about 350 million bushels of carry out. We really don't get excited domestically until we get it down closer to 200 or below 200 for domestic U.S. stocks. Stocks to use 8.21%, something like that, small changes. So some changes did have occurred with lower projected biofuel usage, about 800 million pounds, a little bit higher food, fiber, industrial usage elsewhere. So some changes going on there. Bottom line, not a lot of change in the balance sheet, and some changes also in the soybean meal balance sheet as well. Domestic disappearance actually higher for meal usage, no change in exports. We tend to use almost everything we produce there, so not a lot of change in ending stocks. Price up about $5. So not a lot happening there. Guy, how about the international side?
Not too many changes there. Just starting with China, imports steady at 112 million metric tons this year versus 108. Crush unchanged at 108. Ending stocks really unchanged from last month at 44.4. That's a little bit below last year. So it's still continuing to see good demand out of China. Argentina's 500,000 tons lower. Brazil continues at 180 million metric tons. Paraguay steady as we're starting to watch that crop come off and some of the logistics issues arising domestically with lines starting to form in that. So we'll be watching that logistical switch. On the export side of things, past March, it's really hard to make a significant improvement in our export pace until we get to next fall. And given the increasing size of the Brazilian crop, that switch back to the U.S. in the fall gets to be later and later every year. Really didn't happen until November of this past year. They could have enough supply to take them clear till December. So that's going to bode for not necessarily great harvest values for soybeans this coming fall, but we'll have to wait and see. Logistics can change pretty quick.
And we hear stories of some weather issues down in Brazil. Some areas too dry, other areas not so much. So still some uncertainty there. But unless we're surprised, we've got a large crop, just a matter of how large. So
you guys have mentioned factors, other logistics, and if you're paying attention to the news, a lot of things happening that could be impacting the grain market and kind of are. And what are a few of those?
Well, this is sort of the headline story, the exciting part of the markets this past week, and is sort of on those macro issues. I'm going to start off talking about the cash index. Cash U.S. dollars sort of firmed up. We're just below 100, which is where we were about last Thanksgiving. That's sort of showing the flight to safety, lending support to the U.S. dollar. But in spite of that rallying U.S. dollar, we have seen that significant rally in futures and commodity prices, which is good to see that good underlying fundamental support. Probably the big story that we're all looking at every day is what's the price of oil. Sort of like to take a minute and explore that a bit. I don't know where some of these guys are getting their quotes at. I tend to look at the nearby spot cash price for oil. Some of these guys are talking about oil prices well over 100. Today, we've seen a bit of weakness in the oil where West Texas intermediates down to about $86 a barrel. That's a little weaker. That comes out of the U.S. Gulf. The other that they will look at is the Brent crude, which comes out of the North Sea. That's usually at a premium to West Texas crude, and that's about just over $91 there. That's probably where we're seeing most of the volatility in the oil market, as that European demand relies a bit more on oil coming out of that Persian Gulf situation. And as we're all aware, the shipping out of that Persian Gulf through the Straits of Hormuz has basically been shut down for a few days. So the big question on everyone's mind is how long is that going to be shut down? We see some fairly wild bullish stories on that. I think we should probably temper that expectation a bit. I don't think we'll get much up 120 unless we see things extended for some time. A lot of countries are starting to coordinate releases of security reserves, which is going to weigh on that a bit. But I think we're all hoping for a quick end to hostilities there in the Persian Gulf and a return to normalcy, at least in the transportation sector, because it's just not Iranian oil that comes out of that Gulf, but from a number of those other Persian Gulf countries as well.
And I've read of some of those other countries engaging in strenuous conversations with regard to continued efforts to hamper oil movement out of that strait. Have we seen the cost of ocean shipping move higher with all this risk and uncertainty?
If you're shipping crude oil on a tanker vessels, that's really seeing some volatility on that. But if we go to the dry bulk index, it's actually been surprisingly steady, trading right around that $2,000 mark. It's been steady for a couple weeks now. If you think about it, though, there's not a lot of grain and dry bulk commodities actually going through that Persian Gulf area, some of it through the Suez, but we really haven't seen that impact grain prices. So very happy to see that dry bulk index stay steady, and particularly and more so on Panamax size and smaller vessels. It's we just haven't seen that volatility, which that's helping that export demand.
Are we seeing factors within the U.S. that are impacting our market?
Seasonally, the big issues that normally impact us in this time of year are anticipation of planting and weather, things like that. Really, the first volley of that will be this March 31st set of prospective planting reports. And of course, we talked about stock reports. So seasonally, we're looking more towards what's upcoming in spring planting and shortly thereafter. Watching weather, we still have some dry weather in the Corn Belt in many areas. So we'll see how that plays out. Would probably it doesn't look like we're going to get drowned out of planting this spring. So I may have to eat those words, but it doesn't look like it right now. Guy, anything else that you see that you wonder about?
Look, the economic indicators are pretty good. We've got inflation down under control. Interest rates are reasonable. All those U.S. factors are, unemployment's at lower levels. So those are all strengths for the U.S. economy. Probably the biggest thing we're seeing is at the gas pump with these higher oil prices reflecting there. That's flowing over into ethanol demand in corn.
I would say in the grain markets, we don't lack for news that brings about volatility. We'll start to add weather into it pretty quickly and then see where all of this goes.
Daniel, Guy, I appreciate both taking the time to join us today.
Thank you very much, Shelby.
That was K-State grain economist Daniel O'Brien and the senior economist at the IGP Institute, Guy Allen. We're cutting to a short break now, but we'll be right back. You're tuned in to Agriculture Today, and we conclude our Friday show with the weather update from K-State meteorologist Chip Redmond. Chip, thanks for joining us today.
Yeah, thanks for having me.
Chip, I feel like just this week we were complaining about it being a little bit hot. However, we're kind of on the flip side of that now. So what can we be expecting to see?
It's the spring roller coaster. I feel like it's maybe amped up just a little bit more. We've got a very, what we call amplified weather pattern across the nation with very steep north to south gradients of a ridge of high pressure that dips far down south to a trough of low pressure. And we keep getting a very active pattern. So these high pressures and low pressures are tracking quickly and rapidly, and they have big temperature transitions between them, which is driving bigger storm systems. We've had quite a bit of severe weather in the nation as a whole over the last week. Kansas also saw some. We had tornadoes in the southern part of the state, and we had hail, up to 4.5-inch diameter hail around Kansas City. So severe weather is going to be stronger and more potent with these kind of storm systems and these kind of patterns with these big temperature clashes. That's what the Kansas and the Central Plains are known for. We did get some moisture from those storm systems, mostly favored the same areas. We keep getting rain in the same location right along I-35 and just south. Some impressive totals just for the last couple of events, over a 2-week period, 5 inches around Ottawa and Olathe and even more in some isolated areas along that corridor. And we look at departure from normal, we're looking at some pretty impressive numbers, 3.5 inches, almost 4 inches above normal in places in that area. It was isolated. Again, the storms just seem to track in the same location over and over and over again. We get even further south from there into southeast Kansas. They missed out on a lot of that precipitation, and they're below average for the last 2 weeks. Granted, our normals are increasing. We're seeing that increase the most in the southeast. This is getting into their wettest time of the year. We got about another 2 months till we finally hit that peak, but our upward trend, our average precipitation's on the rise. You get further west into central Kansas, western Kansas, those rises are a little bit slower. They average less moisture, around 1/4 inch to 1/10 of an inch of precipitation a week. And they missed out on a lot of that rainfall, as many as upwards of 40 to 60 days without a wetting rain, at least 1/10 of an inch in portions of southwest Kansas, and a lot of northwest and central Kansas on about 30 days without 1/10 of an inch. And so that's starting to allow these deficits, despite not averaging a ton of moisture every week. We're starting to see deficits increase, and we're definitely seeing a much drier trend than what we've been on over the last few months. Some places running about 1 inch to as much as 1.5 inches below normal. And that's starting to take a toll. We just saw some drought expansion last week, especially in the southwest, south central. This week, not as much drought change as we kind of caught things up a little bit last week, but we're still looking at almost 50% of the state now is within at least some drought category in our drought island of drought-free conditions. Still stretches along I-70 and just southward, kind of the US 50, but that area is definitely starting to shrink overall as we continue this dry stretch.
What can people be expecting when we look at the forecast?
So we're going to keep this big temperature flips. We're going to get a brief surge of warmth here on Saturday, and then a dramatic cold front brings much colder air in on Sunday into Monday, with winds potentially on Sunday up to 55, 60 miles an hour. We're going to have snow showers in the forecast as well, especially for eastern side of the state, both on Sunday and then again maybe on Tuesday morning. But then the temperature goes up. We're looking at near record heat starting to approach the region from the west. Very, very warm conditions. The ridge of high pressure in the southwestern United States, that's going to shift eastward across Kansas and really start to impact us by the end of next week. It's also going to be very dry. Warm and dry is going to be the rule as you go through the rest of the next week and then potentially towards the end of the month. I don't really see another opportunity for a big storm system that'll bring moisture. And also it looks like no real period of colder than normal outside of on Sunday and Monday.
Chip, I appreciate you taking the time to join us today.
Yep, thanks for having me.
That was K-State meteorologist Chip Redmond. That's what we have for you this week on Agriculture Today, but we'll be back with more for you on Monday.